Ladies and gentlemen, and welcome to the third and final day of the Sydney Home Buyer and Property Investor Show. With us now is Payne, the Deputy President of REI New South Wales and Principal and General Manager of Payne Pacific Real Estate in Cronulla. Today's topic is State of the Market, where is the Sydney market heading? Ladies and gentlemen, please welcome Payne.
Thank you. Thank you, everyone. So what I thought I'd do is I'll just start off looking at the drivers in the current market. So in New South Wales, what's currently driving the market? So some demand factors. I've put up there population and consumer sentiment. I think they're two of the biggest drivers out there. There's no question our population at this stage, it's increasing. We can see some figures there comparing us to the States, and I think that's a good benchmark. Australia's on the increase. We're taking more and more people in, and of course these people have to be housed, so housing should meet any population increases. The other thing there I put up there is consumer sentiment, and I think probably about 2004, for those of you who have been in the market for that long, in 2004 the state government in New South Wales brought in some property taxes, which was received quite negatively. For the first time ever, you were getting taxed on the way into a property through stamp duty, you were getting taxed on the way through owning through land tax, and you were also getting taxed as a vendor duty on the way out. So I think in 2004 there was a bit of a shift in consumer sentiment towards property. So it's been a little on the nose in New South Wales, a little on the nose in Australia, certainly in the States, but that's now starting to turn around, and we're starting to see property, not so much the dirty word, but possibly, you know, that could be a good alternative to going out and buying some stocks or just leaving it as cash. We're also seeing household incomes increasing, and with unemployment low, job security high, people have now got a little bit more money to spend on property, so they're out there pushing a little bit of demand up as well. Interest rates seem to be fairly steady. We're certainly not seeing, again in the States, it's very low, but we're not seeing any major driving forces behind it, so I'm not looking for them to skyrocket, but certainly stay fairly steady but increase slowly. And I think wealth in general, we've all been the beneficiaries, or for those of you who had your hands up earlier, we've been the beneficiaries of increasing wealth through the investments that we've been owning. So now just looking at supply, and I've written a couple of points up here for supply, and everyone knows that the demand and supply equation exists out there. Well, property's no different. The number of dwellings that are being placed on the market. At the moment, we're seeing probably not enough homes being built, certainly in New South Wales, and that's despite the state government's efforts in trying to address that factor. We still haven't caught up, and even current projections are that we won't catch up. So all of these people that are coming into New South Wales, they've got to have a roof over their head, unless you want to sleep in the park, and that's some people's choice, but for most of us, we need somewhere to live. So whilst there's this lack of supply and still people moving in, we're going to see upward pressure on values. So the rates of dwelling construction aren't keeping pace with the demand out there. There is a variable, and I would say that you need to bear in mind the recent changes that the state government made towards the planning. If they keep on the same track and they make planning changes, they may rezone properties, they may put extra pressure on councils to keep developing in certain areas, because it's been very slow in the supply of new properties out there. If they make some changes to the planning legislation that allows developers to increase the developments that are actually out there, then you're going to see at least a little more supply, and that will ease a little bit of that affordability the affordability crisis, and I'll get to that I think that's where we're headed, to a crisis. So if you hear of the state government coming out with some planning changes, I think that's good news for property investors. It'll keep the values steady, but look, if they don't, while they don't, values will keep increasing and affordability will get less and less. The other area where I think that the state and to some extent the federal government can have some impact on what we're doing, where we're going, is in the property taxes. So negative gearing is one of the incentives out there that shouldn't be tampered with. If they start to come up with some more incentives a last home buyer's grant for those people that have never had, that went off and fought wars for our country. They don't seem to have had much by way of grants. The first home buyers have had it all. But if a last home buyer's grant came in, something like that might let the stamp duty for those people buying, they might have a rebate on that. That will free up the house that they're selling, ease a little bit of housing pressure, and create transactions that otherwise wouldn't have been there. So keep an eye out for maybe some changes in taxation and some positive news there. So on the supply front, we've I talked earlier about the economy, well, about the growth that Australia's having compared to the US, and we've consistently grown. Certainly for the last 5 to 10 years, our economy has been quite steady, and I think that's been reflected in housing prices. We haven't been up and down so much. And also the population. I was thinking I'd be pointing to a graph here, but I'll just do a few of these ones here. So our population's heading up. In the States, the population is quite slow, certainly in any changes. Another factor in here with for investors to keep watching, the rental market, the vacancy rates. In the States, we've got vacancy rates hovering around 10%, and they have been there for some years. In Australia, since over the last 10 years, we've gone from 3% heading down. Now, in Sydney and New South Wales, which is the area that I operate in, anything under 2%, that's upward pressure on rents. And right now, we're under 2%. We've been there since about 2008. So for investors that are looking at increasing yields, that's a good sign for you guys that the that the vacancy rates are staying low. One final factor on there, and I didn't write up economy. I went there a little bit in sentiment, but mortgage delinquencies, that sets us apart from the States as well. Mortgage delinquencies are up around 6% because of the way that they lend property, the way that they buy property. They're up. And in New South Wales and in Australia, they're down. They're less than 0.5%. So I don't think that we're in for any rocky road out there as far as the property market supply and demand in terms of delinquency rates. That's quite steady. So house prices, affordability crisis. Last house prices saw, I wrote it up there, the highest ever median price was recorded in the Sydney market. That's for a house, so that's 624,000. And I think what the house trends are they're all reflected in the median prices for units as well. And although you can't see it, that was in June 10 of this year, and also units hit 439,000. So that was also the highest median recorded for a unit. So what you can see is, while there are these factors, not all of them contributing at the same weight, but there is an increasing affordability crisis looming, unless you see some of these changes that I alluded to before. So auction clearance rates. Yesterday, who saw the Domain report that auction clearance rates were down to about 50%? Down around 50? Well, look, I think that's just that's only a week. Now, that's because of a lag in the winter properties. We've had a slow winter, slow levels of low volumes of properties, but that was winter's traditionally an average period. But remember what happened with the election? Nothing. Well, that's the same for us. Properties, just everything went on hold, and I think you only need half a reason not to go and buy something. So we have seen those auction clearance rates low. At the same time, though, we sold more properties yesterday than we did at this time last year, and we actually sold around about a quarter more. So don't go by the auction rates. I think that could have given you a false impression yesterday. So what do we see the outlook as? Population still growing in New South Wales, but certainly it's less than in most of the other states. We're seeing a significant shortage in supply. So where I said there before, demand outstripping supply, well, there's only one way for the prices to go, so they're on the increase. Rental vacancy, they're the lowest that they've been for 5 years, and another contributing factor to the demand that has eased was this time last year we had an enormous amount of first home buyers. Any first home buyers here? Not as many as last year, but the first home buyers, for you guys, a lot of people out there looking, but not many transacting. So if this is translating into something for you guys, the clock's ticking, because the investors are watching these vacancy rates. When they join the market, because there's a few of those in the same position as you guys are in, when they join the market. So in summary, the Reserve Bank is saying that unemployment's going to be steady around that 5.3% where it currently is, and that will continue to be low. New dwelling construction will consistently be less than the demand. And in Sydney, our population at the moment, 7.2 million, that will be forecasted to reach 8 million in 2024. So we are really undergoing some heavy growth. So things are not going to change for those of you trying to get into the market. Your affordability will decrease, and for those of you in the market, you can keep smiling and in the knowledge that you'll be able to borrow a little bit more from the bank with your equity increasing. Further interest rates, well, look, we do see those as rising, but not at an alarming rate. So just in summary there, the demand is up and the supply is down. Prices are going to continue to increase, and your affordability, sadly for some of you, will decrease. And I think that that's the message. If there was any of the politicians standing around listening or get their hands on this presentation, there are things that they can do with planning, and there are things that they can do with property taxation that will actually help ease this situation. But that's the state of the market as we see it right at the moment.